Hey everyone, Couch Investor here with another video for you today. Today I'm going to talk about one of the hottest stocks in recent months. Mainly I think one of the only stocks that has risen that much during the crash, and it's Zoom, ticker symbol ZM. I'm sure everybody has heard of it as of now and or are using it for business purposes, family or friends. Now, before I get into this, I want to thank everyone who recently subscribed, who engaged with on our channel, who liked the videos, who watched all the videos. I really appreciate it. Um, Please continue to do so. It really motivates me in times like this to continue make and create content for you guys. And actually, I love engaging. I see a lot of people in my last series regarding the cruise stocks. You can find it here or here. A lot of people asked questions, engaged. Even someone gave me some info that I didn't even know about. So that's amazing. Again, I would like to thank you all for liking, watching, and subscribing to my videos. Would love it if you keep doing so. So like, comment, and subscribe. Especially hit that subscribe button right there. And yeah, let's get into this video. Now, Zoom, as we all know, is like a video conferencing tool like Skype. One of the main solutions are like to have meetings. So like you work from home, but you can bring your home, so to speak, your job at home. Video webinars, conference room, phone system, and chat. Now you can use Zoom for free, up to 40 minutes, I think. For example, yesterday I used it for our weekly class reunion with friends. After 30 minutes passed, I got a notification from Zoom that it has given me an unlimited time for this specific call. And at the end of the call, they said if I schedule my next call, it would also be unlimited. So that's nice. Like they're trying to keep free users using the app that maybe might subscribe in the future. So overall, my experience with Zoom was nice as of now. One problem yesterday on my other laptop, it completely froze. I have no idea why, but hey, those things happen. Now let's look at the graph. How did the stock perform? Well, it came out, it IPO'd 1 year ago at $62. I think the actual price was supposed to be, I think, between $30 or $35 or so. So at the opening bell, it already doubled almost. Then it took 2 months or so to get over $100. And after that, it went all the way down to 62 again in October, stayed there for a while. And then it went back up like a rocket when the virus came and everybody started to think, oh, I might work from home, might want to buy a Zoom stock because everybody's gonna hype and etc. Now the top was $159.56 and then it went down. Obviously, something like that does not need necessarily bad news to go down, because well, it went up, it doubled in less than 3 months. So it's normal to see a little downturn, but there's more bad news to come, but that will be after we look at the numbers. Like I said, ticker symbol ZM. The actual price at the moment is 131. Might be okay, 131. That's what after the market closed. I don't know today what might happen because yesterday was a pretty red day. PE ratio is a big red flag for me. 1,600 PE, very bad. No dividend yield, obviously. 5-year average PE we don't have, and it beat its earnings. Its last earnings. That's one of the positive things about Zoom. It's a very fast growing company. Every year they beat their earnings, almost doubling each year. Like I said, all-time highs, $159. Now, orange juice. Cash, they have $855 million in cash. $623 million in revenue. Cost of revenue, $115. It's reasonable as of now. Gross profit, now we get into some serious stuff. Gross profit, $507 million. Total operating expenses, $495 million. And now comes the big warning. Operating income of only $13 million. Meaning most of their, cash revenue that comes in at a very, very, very big cost, which only leaves them with an operating income of $13 million, which should be higher after this free marketing period that they've got right now thanks to the virus. But yeah, it's a warning number right here. Cash and assets, cash we know. Receivables, $120 million. Others, all the others that they have there, can be whatever, is $98 million. Prepaid expenses, $22 million. Total of $1.09 billion. That's with the cash. If somebody is trying to calculate how this becomes $1 billion, it's because of this. Non-cash assets, properties and everything, $153 million. Depreciation of minus $27 million. Total cash and assets, $129 billion, which is okay for a growing company, still young, especially a software company. They don't really need that much property, so would be fine. They might increase that in servers or whatever, or more offices around the world, I don't know. But as of now, still okay. If you remember, in our last series of videos, we covered the cruise stocks. All of them had like properties of 20 to 50 to 70 billion dollars. So seeing this is normal. Their gross margin is 81%, but then again, operating margins of 2%, very low, very, very low. And then I will compare again to the cruises. Cruise were between 15 and 20% of operating margins. This is too low for me. Maybe it's another warning sign. I don't know, but let's continue. Liability breakdown. Accounts payable, $1.6 million. Accrued liability, $36 million. Deferred revenue, $209 million. Again, money that they don't yet received. Then others, $60 million, comes at $333.8 million. This is a very high number of revenue that they still have to collect. Now I added here shares outstanding, 111 million. Their expected earnings per share are 44 cents for the year. Zero stock repurchasing. I love that. Makes total sense also. Dividend payment, zero. Current valuation at the moment is $38.22 billion. Their last year's earnings were $25 million. Value versus previous earning is 3.34. Now, I want to take this number. You can take this number and divide it by, no, not divide it by, you just take the 111 million times the expected earnings per share, and you get, I wrote it down, $49 million in earnings, which is almost double their last year's earnings, or they're expected to double their earnings this year. Now, we could calculate the PE ratio, the expected PE ratio, thanks to that. So you take the market valuation, which is $38.22 billion, divide that by the $49 million of earnings, and you get a 880 approximately PE. It's half of this, but it's still 808. A PE of 808 is a big warning sign. That means that you would have to expect to regain your money, to make back your money in 880 years. For me, that's, I don't know, it's common in growth stocks to have a high PE, but not that high. To get their PE back to a normal, I don't know, 20, let's say 30 PE, they would have to make in the billions already, But hey, that's one of the warning signs for me. Now let's go look at some articles, 5 metrics behind Zoom's video soaring stock price. That's what we're looking for. Why and how come it went up by 135% over the last 3 months. That's over the key points here. Revenue soared 78%. Zoom's fiscal fourth quarter revenue jumped 78% year over year. That's one of the things of Zoom, is that every year they're growing. It's also one of the only IPOs from last year that were profitable, actually. That's why we get to see the PE ratio as well. So 78% year over year to 188.3 million. This crushed the guidance for revenue during the period between 175 million and 176 million, so that's great. Adjusted earnings per share nearly quadrupled. You can read that. I'm just going to go over the bullet points so we save some time. Free cash flow was $26.6 million. Total large customers jumped 86%. So large customers, obviously contributing customers, $100,000 more in trailing 12-month revenue, increased 86% year over year during the period, highlighting Zoom's growing appeal to large enterprises. Obviously, it's all fun and games when you have like a million users, but if those million users are free users or like are the lowest tier of users, it doesn't really appeal to investors. If you have more and more users that are taking the enterprise plan, which is the highest plan, I think we can see here, it's $20 per month per host. Obviously, if you have a lot of those kind of people or a lot of those, it's not really appealing to investors. This and this is appealing. Cash increased to $555 million. We can see that it was up 176 million in the year ago period and 811 million in the prior quarter. Furthermore, Zoom has no debt, which is great, which is what you want to see in a company. But let's go and look at something negative. Zoom video lurches from boom to backlash amid privacy issues, Zoom bombing attack. So, high-flying Zoom stock has fallen 10% in recent days, including 3-session-long losing streak after rocketing higher amid COVID-19 pandemic. This is the CEO, Eric Wan. Another thing is you can see in the financials, I think on Yahoo Finance or another site, that he sold over $7 million worth of Zoom stock. There's a reason why. I think he knows that the company is currently very overvalued, so he wants to cash in. So yeah, that's one of the reasons. Now, let's read this one because I think this is the most important. For weeks, Zoom Video Communications Incorporated basked in the glow of a surging share price, enthusiastic research report, and insatiable demand among consumers and enterprises. In recent days, however, the one-time darling of Wall Street and Main Street has faced a backlash from regulators and politicians. Hackers have targeted the video conferencing service because of its popularity, leading to a warning to consumers from the FBI about so-called Zoom bombing incident. And a lawsuit filed Monday in California claims Zoom allegedly gave users personal data to Facebook and other outside companies without fully informing customers. Well, this is one of the biggest warning flags yet to be received regarding the Zoom stock. I think, well, we can just go back to the case of Facebook when there was the scandal of Cambridge Analytica, what it did for the stock. I think we can expect, if this goes unanswered, we can expect the same thing to happen to Zoom because, well, this is straight on video conferences, private information going straight to other companies without you knowing. This is a big privacy breach, and I don't think they would let it go. Well, they filed for a lawsuit, so I don't know. Let's see what it says. But for me, that's we have to download that, so not gonna happen today. Okay, we can see it here. Damages and equitable relief, obviously, class action. And the worst thing is that I haven't seen an answer from Zoom anywhere. Like, they didn't even say anything about the matter, which is bad, because like when you hear this kind of news, you would like the company to answer and say whatever, positive or negative comments, but still you would like them to say something. But then again, if you want, we can look back at the year to date. I think the stock has to go back to the $100 to get some relief, and after that, if more bad news comes, I think it should go back to the $70, and then it might be a bit more interesting, in my opinion, to get some Zoom stock. But as of now, I'm not touching this. I won't touch it until it goes back to $70, to be honest. But yeah, that would be it. Again, thanks everyone for watching the video, for engaging. Don't forget to like, comment, subscribe. See you all in the next video. It's gonna be about some airline stocks, so I'll keep you posted and see you there. Bye bye.